Mission Wealth has been on my interview wish list since we launched Growth Leaders of Wealth Management. Not because they're the biggest firm or the flashiest brand, but because every time I pull back the curtain on how they've grown from $750 million in assets managed in 2012 to over $13 billion today, I find something that makes me smile, recognizing the impact that is truly achievable when building an advisory business in all the right ways. And the conversation did not disappoint. There was so much from the conversation that caught my attention. They're limiting their advisors to managing 60 client households. 60. At a time when most firms measure success by how much AUM each advisor can manage, Mission Wealth is doing something fundamentally different. And it's working. They're growing at over 40% year over year. The paradox fascinated me, of course, so I dug deeper. What I discovered is that Mission Wealth has built something rare. They have 62 equity partners. Not 62 employees with phantom equity or profit sharing. 62 actual equity partners with a single share class, where marketing and technology professionals hold the same type of partnership as wealth advisors. Most firms at $13 billion have 5, maybe 10 equity holders. Mission Wealth has been systematically expanding ownership for years, creating transparent pathways to partnership across every function of the business. And they've done it while maintaining the kind of culture that keeps people for decades. Matt's been there 22 years, Danelle 15 years, and the kind of community commitment where advisors and partners are actively involved on nonprofit boards, leading philanthropic initiatives, and giving back in ways that are woven into how they operate, not just added on for optics. That culture isn't accidental. It's architected in how they grow. They're adding about $2 billion in assets each year, and about 80% of their growth comes from organic channels they've been patiently building, not from acquisitions. Today's guests are the leadership team behind that model. Matt Adams, CEO, who's been with the firm since 2003. Danelle Stewart, president, who joined in 2010 and sits on the Women's Fund of Santa Barbara Endowment Committee while leading the firm. And Michelle Winkles, chief marketing officer and equity partner, who came from outside the industry in 2017, volunteers with Calm, a nonprofit supporting children and families, and has built the marketing infrastructure that's positioning digital to become their next billion-dollar growth engine. What makes this conversation especially meaningful to me is how aligned their approach is with everything we believe at FICOM. When I spoke to John Werns, strategic advisor to both Mission Wealth and their private equity investor, Great Hill Partners, he said something that had me shaking my head, yes. Fewer than 20 RIAs out of thousands are doing paid digital profitably. Not because digital doesn't work, but because most firms don't have the patience to build the foundation before they try to scale with paid digital. Mission Wealth has and does. They understand that sustainable organic growth requires infrastructure, not just tactics. And Great Hill didn't invest in them to fund an M&A roll-up. They invested specifically because Mission Wealth prioritizes organic growth, and they wanted to help accelerate it. This Growth Leaders podcast tells the stories of advisory firm founders driving differentiated growth. What you're about to hear is not a template to copy. It's a window into the decisions that create optionality. Pay attention to how they've structured their wealth strategy group as a growth engine, how they think about the 3-year learning curve for new channels, and how they've built a culture that's both retained talent for decades and attracted outside investment. Because if you're building a firm and wondering how to create sustainable, diversified, organic growth while building something that lasts beyond the founders, this conversation will give you a whole lot to think about. That's right now on Growth Leaders of Wealth Management with Mission Wealth. Before we dive into the conversation, let me give you the numbers that caught my attention, and more importantly, what they reveal. Mission Wealth manages $13 billion in assets with 100 advisors serving 4,500 households. From 2023 to 2024, they grew by 42% year over year. They've been on the Inc. 5000 list for 9 consecutive years. But here's where it gets interesting. When you strip out market appreciation and M&A activity, the two things that most firms use to inflate their growth stories, Mission Wealth's organic growth rate consistently lands between 16 and 18% annually. That's roughly 3 times the industry average for firms at their scale. And they're doing this while capping advisors at 100 client relationships, with the actual average sitting at just 60 households per advisor. Think about that for a moment. Most firms at $13 billion are pushing advisors towards 150, 200, even 250 households to maximize revenue per advisor. Mission Wealth is doing the opposite and growing faster. That contradiction tells you something fundamental about how they've architected their business model. So I asked Matt to break down exactly how they think about growth. I read in my research that from 2023 to 2024, the firm grew by over 40%, sort of year over year growth. And in speaking with John Werns, who was kind enough to make the introduction and get us all together here on the podcast, who's affiliated with Great Hill, who I know made an investment into the firm this year, he said that you're growing by $2 billion of new money a year. So how do you contextualize growth? Like when you talk about growth, what are you most proud of? And help me sort of tell the story of Mission Wealth's growth.
Yeah, when we talk about growth at Mission Wealth, we're always super proud of the portfolio of growth levers that we have. So those numbers that you mentioned are accurate, and we are growing about 80% of our growth through organic growth channels. The custodial referral programs are super important to us, but our advisors are wonderful at generating new business. We have a robust digital marketing program that Michelle can tell you all about. And we're also doing a fair amount of mergers and integrations. And we're careful to talk about that as mergers and integrations, M&I, because we are so passionate about the full integration of those firms that have joined us.
And so when you think about that 40% year over year growth, and if I even go back a little bit further, I think I saw that from 750 million in assets in 2012 to over 13 billion today. That's a really significant year over year growth rate. When you talk about organic growth, 80% of it being organic, are you stripping out market?
Correct. Yeah. So we're very focused on our organic growth rate, X markets and X mergers and integrations, which we spoke about before. It does fluctuate a touch, but we are in that high teens percentages each and every year, 16 to 18%, and very proud that it's not reliant upon just one source. We're a firm that believes in multiple sources of organic growth, and we do our very best to cultivate them all.
16 to 18% organic growth every year, excluding market returns and acquisitions. That's roughly 3 times the industry average for a firm at their scale. And Matt's emphasis on multiple sources matters. They're not dependent on any single channel. That diversification is what makes the growth sustainable. But where does that discipline come from? It starts from culture, and culture starts with founders.
Yeah, I joined in 2003, having come from the asset management industry in the early part of my career. Was drawn to the culture of the organization and the people and the difference that we were making within clients' lives. It was just really readily obvious to me how good of a model that we had here at Mission Wealth and what a wonderful group of people. So it's that culture that has really kept this group together. I've worked here for 22 years. It doesn't make me unusual. Those people that were there, 22 years ago are still here. And there's close friendships and close professional relationships that we've developed over that time frame. It's an environment that I was initially attracted to, set up by Seth Streeter and Brad Stark initially. And their vision for the firm when they founded it in 2000 was to form a firm that was the opposite experience of what they had in their early part of their career, working for a multinational financial services firm down in Los Angeles, that was a firm where they weren't supported, where there wasn't a team environment. And so in 2000, both Seth and Brad set up Mission Wealth to say, what if we formed a firm that kind of did things the opposite of the traditional way that financial services are set up? Let's set up a firm where we help each other with our new business goals, where we help each other develop new channels of growth, where we help each other fulfill the needs of our clients each and every day. So it's really sort of that opposite culture of the wirehouses that I think has attracted a lot of us to Mission Wealth.
And Danelle, you came into the business in 2010, if I'm remembering correctly, in like a sort of a business development capacity. So tell me a little bit about what attracted you to Mission Wealth and what you were doing when you started with the firm.
Sure. Yes, I joined in 2010. We were about 500 million in assets under management at the time. I had been with a prior firm. I'd been a CFP since 1999, so I had been working as an advisor at another firm for about 14 years. And even though I was a fiduciary as a CFP, the firm was not a registered investment advisor. It was not a fiduciary. So when I came over to the firm, I was really excited at the opportunity to work at a client-first firm, and I was hired on to be the director of business development. And I worked in that role for 10 years, leading new business to the firm. And I loved that job. It was always easy for me. And I don't want to say that sales is easy because it's not, but it was easy for me to draw new clients to the firm because I always felt so convicted in what we do. And I always believed that clients would be better off if they hired us, whether they were with another advisor or trying to manage their finances on their own. I always knew they'd be better off with Mission Wealth. And so I did that for 10 years. And then in 2020, I transitioned into the chief client officer role. And that was more of a practice management focus as we had spread out across the country and had advisors and clients across the country. We wanted to have more dedicated resources to ensuring a consistent and exceptional advisor experience and client experience. So I did that for 2 years, and then I transitioned into the president role about 3 years ago. And it's been a wonderful ride. I came to Mission Wealth because of the people, and I've stayed here because of the people.
And what's in the name Mission Wealth? I'm lucky to know Seth Streeter and know how mission driven he is. And that sounds like, Matt, that was the brand name since 2000 when they launched the business. How important is the name of the firm to the culture, the people, the way you work with clients?
Oh, it's absolutely critical to the way in which we serve clients. And so everybody here is completely focused on, not only supporting our clients' objectives, but also their professional and personal development. So we're highly mission aligned, and we're proud of the 25 years that we've been in business. And we find that our name and our brand really resonates with the advisor community.
And Michelle, you came to Mission Wealth in 2017 from outside the industry.
Yes, I did. I actually had worked in a marketing role for over 11 years at a software company. And I saw that there wasn't much purpose in what I was doing, and I really wanted to become a leader and grow. And so I had left that company and I started my MBA program. And while I was there, Danelle had actually been someone that reached out to me, interested in talking to me about becoming the director of marketing at Mission Wealth. So I didn't know much about the firm at the time, but I did see it as a fascinating opportunity to build something from the ground up because there was no official marketing department at the time. What was interesting was obviously the leadership opportunity, but I would have to agree with Danelle and Matt on the culture. I was really looking for a place where I could make a meaningful impact. Part of my MBA program was entrepreneurship and philanthropy and strategic management. And so I could tie all three of those aspects from my program into something I was going to do and help build that. And that was really exciting to me. And when I had met with Seth and Janelle and other team members just during the interview process, what stood out wasn't just their intelligence or their ambition, but it was how they made me feel. And there's so many quotes out there about, you will forget what people said or did, but you'll never forget how they made you feel. And fast forwarding to today, I just have that same feeling. And I think it defines Mission Wealth. Even as we've grown into be this large firm with billions under management, we've held on to that close-knit, people-first culture, and I truly value that.
22 years, 15 years, 8 years. That kind of tenure means Matt, Danelle, and Michelle have lived through multiple chapters of Mission Wealth's growth story. They've seen what works, what doesn't, and how growth strategies need to evolve as a firm scales. So when Matt talks about diversified growth channels, custodial referral programs, advisor-generated business, digital marketing, mergers and integrations, he's not reciting theory. He's describing what they've built, tested, and refined over 2 decades. Let's hear how those channels have evolved. So now let's dive into some of those growth levers that you were talking about, Matt. I completely agree with you with the that there's such a need. It's a business imperative really to have diversified growth across a business like yours. And that overall, if you're looking at your year-over-year growth rate, which includes the M&I and market, that your organic growth is sort of coming in at about 16 to 18% year-over-year growth, which is it's a factor greater than the industry average. So let's break down each of those sort of channels. I think what I'm first curious about is how do those different channels, how have they changed in recent years? So like, is it that in every year when you're coming in and you're doing your strategic planning and you're looking ahead to the next year, it's like we expect X percentage to come from the custodial referral programs down the list, and that has that been consistent, or have you seen the percentage contribution from each of those growth levers change in recent years?
I always think about our growth levers being additive to one another, and tend to think about the company in 3 main chapters. The first being a small ensemble in Santa Barbara. So, a group of 10 to 15 of us through the first 10 years of Mission Wealth built the firm through COI referrals, client referrals, direct marketing, and just being out in the community, the beautiful community of Santa Barbara. So those initial self-generated growth skills never faded from Mission Wealth and have always been an important lever of growth that we rely upon today. The second chapter of Mission Wealth with the custodial referral programs, I generally think that chapter began around 2010 and continues today. But beginning in 2010, we really put intentionality behind the custodial referral programs. And about half of our organic growth comes from the custodial referral programs today. That number has remained relatively stable, but we're always looking for new ways to grow the firm. And those initial skills that we built of self-generating new business, they apply to the custodial referral programs. Those are skills that the advisors need in that program. The third stage of Mission Wealth's growth levers has been through the mergers and integrations channel. And I appreciate you highlighting the fact that we're a full integrator and we believe so strongly in that. But as we've begun to do mergers and integrations across the country, we've now completed 18 of them. We're really looking to integrate experts and not as focused on aggregating assets. So that sounds a little bit counterintuitive, but what we've found is that our average integration has been a team of about 2 to 3 people, and they're advisors that have wonderful skill set, wonderful niche, wonderful geography. And what they're really looking for is just tapping into these growth channels that Mission Wealth has, whether it be the custodial referral programs, digital marketing, and some of the new initiatives we have in the upcoming year around podcasting and just general larger media presence, artificial intelligence, and so forth. So I just look at all of these channels of growth, Meg, as being additive to one another, and maybe the layers in which we added them here at Mission Wealth were unique, but we're so proud that we have all of these channels of growth to really rely upon. And, we think that that's what keeps us vibrant and strong.
When was your first integration? What year was that?
That was in 2018. And we've typically averaged a few a year. In recent years, we've been pursuing more integrations as our M&I team has been built out. So first integration was in 2018 in Santa Barbara itself. And then, as time went on, we started to do more integrations per year. And now we're proud to have completed 18 of them all across the country, and certainly looking for additional opportunities and advisors that would love to join our platform.
We recorded this conversation toward the end of 2025. Around the same time, Schwab announced they were raising the minimum threshold for their custodial referral program to $2 million in investable assets, and the minimum for firms to participate at $500 million in total assets managed. For firms that rely heavily on these programs, these were significant shifts. I wanted to understand how Mission Wealth was positioning themselves to compete at this tier. And what I discovered was their wealth strategy group.
In my 22 years here at Mission Wealth, I feel like the right thing always happens at the right time at Mission Wealth. And we certainly prepare for these things to happen. But the change with the Schwab referral program to the $2 million minimum really perfectly fits our client segmentation. At $2 million and up, we're offering all of the inclusive services that you would expect, of course, planning and investment counsel, but we're also doing in-house tax preparation, in-house tax planning, estate planning, risk management, and looking to add more. So that 2 million and up client segmentation level that Schwab just serendipitously chose as well, it really fits our segmentation and was yet another right thing that happened at the right time here at Mission Wealth. What we've found at Mission Wealth as we've expanded our wealth strategy group, those professionals and specialists that focus in these additional value-added services, is that it has increased the average size of our net new clients to over $5 million of AUM per net new household. And so really it is this one-stop shop, to just use kind of a popular term, of offering all services that does allow you to move up market. And, philosophically, we had never been into offering sleeve investments at some of the smaller minimum sizes. We always wanted to have a comprehensive and proactive approach.
Yeah, I would agree. I would say that's one of the things that maybe is a little bit surprising about the growth that we've had, is the impact that our wealth strategy group has had as far as attracting and retaining clients to the firm. About 3 or 4 years ago, we started to build out a wealth strategy group with a team of professionals who are not responsible for any of their own client relationship management, but they are experts with expertise in areas like tax, estate planning, risk management, philanthropy. And what it has allowed us to do is serve more clients. And then, as Matt said, go upstream and be able to serve larger clients who have more complexity, who really value having everything taken care of under one roof, really value having an advisor who they know is quarterbacking with all of these other professionals. It's allowed our advisors to do a better job of managing their client relationships, knowing one advisor described it as they can helicopter this ninja into the client meeting who can address that specific tax concern and show the client that we have a team of people working on their behalf, and allowing the advisor to continue focusing on the overall relationship management. So that wealth strategy group has allowed us to work with larger clients, and it, as Matt said, it ties in perfectly with these new minimums.
And I'd have to assume, has that also helped with expanded wallet share from existing Mission Wealth clients, being able to deploy this wealth strategist team?
Yes, we've always been pretty good at that. We've always been a comprehensive wealth management firm. I mean, one financial consultant even said, "Oh, you guys are the wealth management firm that actually does wealth management." So we've always been a financial planning first firm. And through that financial planning process, you tend to uncover opportunities for increased wallet share. So we've always been pretty good about that. But I do think that clients have more confidence when they can see an entire team of people, and it's not just this one advisor and gosh, what happens if something happens to that person? They like to know that they have a wonderful advisor who, of course, at Mission Wealth is going to be tenured and credentialed and caring and very proactive, but that they're backed up by a team of other caring and talented professionals.
This is how they've increased their average new client size to over $5 million in AUM while maintaining that 60 household per advisor average. The structure supports complexity without burning people out. Traditional wealth management firms are built around individual producers protecting their books. Mission Wealth was built around shared revenue and shared growth goals. After the break, we'll dig into how you actually operationalize this structure at scale. Are you looking to supercharge the growth journey at your business? FICOM is ready to make it happen by serving as your embedded growth partner. Let us put our unmatched industry and growth marketing expertise to work for your business. Our strategy-first, multidisciplinary approach ensures your business goals stay at the forefront, so you're always aligning all your marketing activity around the growth you want to achieve. Visit us at ficompartners.com to find out more. All right, we're back. Before the break, we heard how the Wealth Strategy Group enables Mission Wealth to serve complex clients without overloading advisors. But here's the question that structure raises. If you're capping advisors at 60 households, how do you actually grow the firm? The answer is the Herbers & Company Diamond Team model. Matt's about to reference research and a proprietary teaming framework from Herbers & Company, led by Angie Herbers, who's a good friend and someone I deeply respect for her and her team's work. Mission Wealth took the Diamond Team framework and built on top of it to support the business as it scaled. Shared revenue, specialized roles, and managing directors whose only job is helping other advisors succeed.
It goes back to some initial work that we did around the Diamond Team research that Angie Herbers put out.
Angie Herbers, yeah, she's a good friend.
Creating teams of advisors that were working together. And so, your question is, how do you, operationalize, or how do you empower one advisor over the other? But really, I think one of the keys to success at Mission Wealth is that we've empowered groups of advisors together. And, we've expanded outside of the Diamond Team model into a regional approach where we have 3 or 4 Diamond Teams working together. And we've created new roles and promoted successful advisors up through our organizations, up through our organization into a role that we call a managing director. And the managing director is, their sole job function is to help the other advisors on their team achieve success, whether it be through acquiring new client relationships or just taking great care of existing clients.
I would say, as far as how we operationalize it, we provide an environment where advisors can really flourish. And most people become advisors because they care about that one-on-one time with their clients. They like to help solve problems. They like to bring value to the client relationship. Yet advisors are tasked with a lot of different responsibilities. In some cases, at other firms, they might be doing compliance or their own marketing or HR or IT. And at Mission Wealth, we've operationalized it so that advisors can spend their time advising clients. And so to that end, what we do is we limit the number of clients that advisors can serve. We ask them to cap out at no more than 100 relationships. We know that our clients deserve that individualized attention. They deserve those custom financial plans that are designed for their unique needs. And advisors love that. They love that we're not going to force 250 households on them and ask them to under-deliver and overpromise on what they're actually able to do for their clients. And then we have transparent compensation grids. We have transparent paths to partnership. So people here can see what their career projection can be based on the revenue that they're managing and the progress that they make within pretty clearly stated promotional paths. So there's no black box of what does it take to promote around here, or what if I want to become a lead advisor and spend more time on business development, or if I want to become a managing director. That is up for the taking for any of our advisors. And so it's an environment where we can look around and see dozens of examples of people who started here as associates and are now working as partners. Matt started here as an intern 22, 23 years ago, and we have a lot of examples like that. And so providing advisors with an environment where we're not going to overwork them, we're going to bring them resources through the Wealth Strategy Group. What? Your clients want us to do taxes? Okay, we'll do taxes. And frankly, we've been surprised at the demand. We can't hire tax associates fast enough to keep up with the demand on that. We have a centralized investment department that does the research and the trading and the portfolio admin. Michelle does a wonderful job of leading our marketing team. One of the things that we've implemented recently, and she can talk more about this, is testimonial IQ. And so advisors are now getting testimonials from their clients. And to be honest, they were a little reticent at first, kind of worried about getting some bad reviews, but almost every single one has been 5 stars. And maybe one of them was 4 stars. So our clients are coming forward with these really wonderful reviews. And now we're able to use that to promote our advisors. So those reviews are on their bio pages on our website. We're promoting them for Firmwide on LinkedIn. They show up in Google search. And so we're helping to support our advisors' growth and positioning them in the community as people that can be trusted and that can take good care of their clients.
Centralized investment team, in-house tax preparation, wealth strategy group, marketing support, testimonial programs. Mission Wealth has removed almost everything from the advisor's plate except client relationships. And yet they're capping advisors at 100 households with an average of just 60. So how do you grow a firm when you're intentionally limiting capacity, revenue pooling?
Number of different benefits that we saw through the Diamond Team approach and now the regional approach is that by sharing in the revenue across a pool of advisors, it does a number of important things. One, it allows certain advisors to specialize in business development and others to specialize in service. And we reward both of those functions here equally at Mission Wealth. We both pathways to partnership exist for those sub specialties within advice, but being able to specialize in division of kind of labor within these Diamond Team models has allowed us to grow faster. And then by virtue of sharing the revenue across a team or a region, it's allowed for the transference of client relationships from one advisor to another. So they're better able to capacity balance. And they're also able to pass some relationships on to senior associates that are now promoting up to wealth advisor. So we've created a very, I'd say, very high probability of success career pathway for associates to come up through Mission Wealth. We talk about this being generally a 2 to 3 year career pathway to go from associate into wealth advisor once you're credentialed and experienced and know the systems at Mission Wealth. So, the whole Diamond Team model was really transformative for us. We started with that in about 2011, 2012, as we gained traction within the custodial referral programs. And our personnel strategy has really taken off from there. Our advisors love working in a small team. It helps them maintain that boutique feel, not only for the clients, but also for themselves, for this, small group that they really, know inside and out all day long.
Well, it's got to be really additive that you've got the optionality in paths too. I mean, it sounds like, to your point, that you're equally rewarding service and biz dev, which is important. Not everyone wants to be a business developer. Some people are naturally inclined towards it. Some want to learn it. Some people are terrified of it. And so having a structure that I think facilitates growth based on people's zones of excellence is really important. And then to have, I would assume, like if you wanted to develop some level of excellence in some of these wealth strategist capabilities, planning, estate planning, tax planning, risk management, like, is it right to assume that you could also move into one of those roles?
We're so proud of the fact that our 4 pathways to partnership aren't just for advisors. We have pathways to partnerships for all of our different departments, whether that be marketing or technology or investments, you name it. We want all of our team members here to feel as if, sky is the limit and that, there's just unlimited career opportunity for them here at Mission Wealth. So yes, we want to support advisors and those that want to specialize in business development or service, but it takes a whole team here at Mission Wealth. And we're going on 62 equity partners strong, the vast majority of which have come up organically through the organization, like Danelle and Michelle and myself.
62 equity partners from marketing, technology, investments, wealth strategy, not just advisors. That's a deliberate choice about what the firm values. and it shows up in how they've built their marketing function. When Michelle joined in 2017, there was no marketing department. Now she's a partner with equity, leading a team that's becoming a primary growth engine. That evolution tells you something about how serious they are about organic growth.
It's definitely changed and it's evolved so much over the years. When I stepped in, the marketing there wasn't a marketing team. Like I had mentioned, there was an individual or two that were supporting marketing. They were wearing many hats. So when I stepped in, we were working on a new website. So I think that was our first major project, was building a website. We had one previously, but it was very simple, and we needed one that was more explanatory of what we did and how we served our clients. I would focus day to day on client events, planning content, one sheets, organizing collateral to help advisors get content to their clients. There wasn't much business development or digital marketing at the time. That wasn't one of our primary growth channels, but one of them was custodian referrals and focusing on supporting that growth channel. So we did a lot of mailers at the time. That took a lot of our time. We couldn't really measure if they were working or not, but we were growing really well in that area. And so we continued to do a lot of mailers to FCs and let them know of success stories of how we've helped their clients and the different services and the new offices that we were opening. As it evolved, fast forward to today, we are focused highly on digital marketing, but also everything around our firm's brand, client communications, supporting all the growth channels. So back then it was more just B2C and B2B. And today, as we're doing mergers, we're supporting the marketing for that and the onboarding of integrations. We are still supporting advisors on logistics of the B2B channel. When we get leads and when we want to support them with branch presentations and such, and some email communications. But there's so much more. I look at it more today as we are a growth engine, and we're focused on supporting that for the entire firm, whether it's marketing our team members, marketing our brand, helping integrate our new partners, and everything. Right now, we're in the middle of a brand transformation. In 2026, we're taking a big leap to prepare for the future. We are trying to focus more on improving our infrastructure so that all of our channels are more connected and we can do more. So when I say that, we are going to be upgrading our marketing automation program. We are focusing on new tools that give us more AI insights so we can have more personalized content to our clients and to prospects. We are also refreshing our brand, and so that's going to be a big overhaul. But we're thinking about things like creating a new podcast, for example, reaching more clients and more advisors and telling our stories. We want to do more AI-enabled marketing. So thinking about some of the latest AI tools, we want to prepare the way that we show up to others better. So we know the website we built when I had first started almost 9 years ago looks really great on the outside, and it's very complex, but it doesn't speak to the future answer engines like ChatGPT and such. So we need to revamp that and think about AEO and GEO and such, and build a new website. So those are at the forefront of our mind today. Revamping the way we have events, thinking of them as not just client events, but regional growth events where we can try to optimize the COI referral channel, our client retention, and also maybe some digital prospects, and bringing them into some in-person events to help increase new business conversions.
It's a lot.
Yeah.
Tell me about your team.
We have a great team of, right now it's 4, and we're looking for another individual, but our model is based off of not so much one person does website, one is a writer, one does events. I'm really trying to help them, each individual person, grow and set them up as experts for a growth channel. So we do have someone responsible for our B2B marketing. We have a team member responsible for M&A or M&I integrations and marketing. Another really hyper-focused on digital, another one B2C, focusing on client communications, website content, social media, and such. And from there, they can be experts and work really closely with growth champions at our firm to learn about that segment, understand the message that is distributed to that segment and such, and then grow and build teams under them so that we can be really strong in each of those areas.
Digital can be a word that drives people nuts in this industry because they don't really know what it means. And if they've tried it, they don't really know if it works and they don't know how to measure the effectiveness of it. And it can feel opaque. So what's working at Mission Wealth right now for digital, with digital specifically?
What's working? Well, digital encompasses everything marketing, I think, today. So it's hard to say like one thing is working over the other. But I think what is smart to think about is having multiple channels of lead gen for marketing. If you're thinking about new business, you don't want to just do one thing. You want to try out different things. And when I say that, it could be a combination of um, paying for leads with different vendors versus ad campaigns versus social media marketing, organic SEO, organic lead gen. There's a lot of different tactics there. But I think what's starting to work is always making sure that you're SEO optimized so that you show up where people are looking for you today. But what we're seeing in the future is people are going to start using more tools like ChatGPT and Claude and Perplexity and, methods like that. And it's just the adoption is going to increase and it's going to increase fast. And if we don't prepare for that and show up where those people are asking questions, we will not have as great of a digital presence. So I definitely think what's working is multi-channel lead gen. Also staying tightly knit with sales. Because marketing does not just stop top of the funnel. You have to think about the full funnel and be really closely aligned with the sales team. Digital leads are not easy to convert. We know that. That is an industry fact. The average conversion is anywhere from 2 to 4, 6%,
yeah.
maybe. And so
2%,
I'm really trying
is the average. Yeah.
I'm really trying to beat the odds there. I'm trying to think about why is that? And back to what Matt was talking about earlier, he was saying that we're really great at our sales process with custodian, like B2B marketing, because of relationships, right? There's a lot of trust in those relationships. Client referrals are a much bigger conversion rate, but digital is so much harder. There's less trust and credibility there, and you really have to chase and work those prospects to get them to convert. And so what's working is leaning into personalization and automation and being on top of the digital leads in order to convert them, and being really closely, tightly knit with a sales representative that is focused on digital leads and understands the value of them and the chase and the follow-ups it takes to close them and convert them.
And it sounds like, Danelle, from your point or vantage point and what you shared earlier, that client testimonials are really working.
Our clients are responding way more than I thought they would, and they're being effusive in their remarks. It's wonderful to see and confidence building for our very hardworking advisors. To the degree to which it draws actual new clients to the firm, I think that is yet to be measured, but we're very optimistic.
Now, this is where I want to bring in John Werns' perspective. John is a strategic advisor to both Mission Wealth and Great Hill Partners. He's one of the industry's most respected marketers, and I'm lucky to be able to call him a friend. He had some things to say about digital marketing that I think every firm needs to hear. When I asked him what originally attracted Great Hill to Mission Wealth, his answer was immediate.
There's firms that really prioritize organic growth, and you're always adding to that stack. And they've always done that, and they've grown so much organically. So a little different from Great Hill's perspective was we were looking for firms that prioritized organic over inorganic. And I know when everyone thinks, oh, private equity and spreadsheet math, and we're just going to buy a bunch of firms, Great Hill definitely looks at the world differently. That doesn't mean we're opposed to doing acquisitions. We're very open to that, but it's never at the cost of organic or slowing that down. And so that was, I think, a unique viewpoint that both firms, that both Mission and Great Hill entered with, and was like, oh, we see the world the same way. We need to just keep leaning in on organic. Sure, we'll do some inorganic, but that is not the spreadsheet math that's going to drive what we do. So the firm has a long history in the custodial referral networks and has been a top performer and has a lot of runway yet. And in a lot of ways, for a 10 to $15 billion firm, they're punching way above their weight. So they're doing great. And so that's great to see. They understand how to sell, how to service, all the things that happen. That said, they've been so busy with their programs, they had just started to put a toe in the water in digital and direct marketing. And what we saw in diligence, specifically to your question, was they had the bones, but they hadn't built it out yet. And so you could see they were taking the right steps. They were leaning in. They were hiring the right sales and marketing and had good partners, but it just needed to be accelerated to get the flywheel going. And that's what we've really been focused on the last 6 months.
Michelle and her team had already started testing digital. They'd found the pain points and knew what needed fixing. Great Hill's investment gave them the resources to scale what was working. But John had seen something in his years as a marketer that I wanted to understand. Why do so few firms actually make digital marketing profitable? His answer started with 2 buckets.
I think of it in 2 buckets. So the first bucket, let's call foundational marketing. Let's just call our website needed a tune-up. We needed a brand refresh. So, things all trending the right way, but some a little out of date, some a little stale, just needed to bring that all up to speed and get that really going. And then some of the tertiary pieces to that, like working more aggressively on testimonials and doing more PR. So kind of that foundational layer just needed a touch up, right? The good bones again were there, but need a touch up. Then it's really diving into the paid channels, which we've already been doing. So that means buying third-party leads, creating our own leads, doing more paid campaigns, and really focusing on our conversion funnel. So today we have internal people that were already at Mission, specialized into converting leads and closing leads and handing them off to a team. And as we grow, we're building that into its own specific area around business development for marketing leads and really making sure that we have people ready to respond quickly, to help them through the planning process and then get them to the right home on the right team throughout the country. The other thing I'd say is the difference in digital. People say digital, and that's like, that means 90 things. And even like at a base level, if you have a great website and some lead magnets, you can open that door to capture some more people. That's very different from running paid campaigns, in the ecosystem to try and generate leads. The quality is different. The cost is different. So there's kind of that low-hanging fruit stage of digital where you're getting, you've opened the door and people are coming in. And then there's another swing where it's, hey, I need to pay for leads. And that's really tricky. And it's, not as many people do that as well as I think we all think.
I think that that's very true. I think that a lot of times what you hear from stages when you've got executives of some of these really large platform businesses or national RIAs, and they have to talk about how they drive differentiated organic growth because it's part of their value proposition to the advisors that they're looking to acquire. And so they'll say like digital is working really well, paid's working really well. But when you start peeling it back, it's like oftentimes it's actually the revenue that comes in is not outweighing the cost yet. And so I think that's a really important point to make that, it sounds like fun and sexy and like we all want to do it. And I think some people think it's the easy button, which it's certainly not. But there's the percentage of firms that I think are doing that very, very well are still quite small in the context of the broader ecosystem.
Yeah, I think you could have a list and it would be less than 20. Like if you and I compared notes off the record, we would have a list of firms really doing it well. It's for sure less than 20.
Right. Which I think is a huge opportunity. I look at that and I'm like, awesome. Like this means that like we've got all of this opportunity and potential ahead. But to your point, it's got to be in some ways, like we talk about a systematic and progressive approach to growth. And like you've talked about needing to have the fundamentals and the foundation, and you can't just go immediately to the, like, I'm going to buy multi-sourced leads and expect to have an ROI within the first 6 months. You and I both know that that's not realistic. It's like a puzzle, and the order in which you place the pieces down matter to actually get to a complete puzzle, and you're probably never going to finish the puzzle. And so I think that to me, I look at that as like, wow, this is awesome. There's endless opportunity for firms that want to be on that path and working toward that progression, because there are so few firms today that are doing it successfully.
And I agree. I love the puzzle analogy, Meg. It is truly a puzzle. And at heart, I'm more of a direct digital marketer than I am a brand marketer. I mean, I'm both, but I always steer that way. But I've made that mistake enough where I do these, I have an exciting rifle shot campaign, but the foundation isn't there and it doesn't work. And so, I mean, I've just made that mistake enough in my career that I've become a little bit wiser and to find a balance of the two.
Everything John just described, foundation before paid channels, the puzzle analogy, the patience to build properly, that's exactly the philosophy we bring to every client at FICOM. When he said fewer than 20 firms are doing paid digital profitably, it's not because digital doesn't work. It does. It's because most firms don't have the discipline to build the foundation first. Mission Wealth has that discipline, and it starts with how they think about time. Matt has a framework for new growth channels that I think every firm leader needs to hear.
Yeah, I'll take a stab at this because I've been wanting to comment a little bit on digital marketing. And it's true. It's, it takes some time to learn how to do any new growth channel. And, in our experience managing a portfolio of growth channels, I would say I'd give it about 3 years for any one of these growth channels to really begin to take hold. And so that might sound like a long time to some on this podcast, but, anything new does take time, not only for the advisor to learn and for us to learn how to relate to the end client in that channel. But I would just say organizationally, it takes time for an organization as it gets larger to adopt and to fully understand the place of a new channel of growth within the firm's longer term vision. And so with respect to your question of, how do we set goals in every one of these different channels, I would just say it's with the acknowledgement that each one of these channels of growth is just at a slightly different stage of its evolution. And so digital marketing is one of the newer channels of growth that we have within the firm. And the growth goal for it happens to be one of the smaller goals at this point in time. But we know every year we learn something. The firm adopts this new channel of growth that much more. And we can do a little bit more and then a little bit more. So this has been our experience over the years, whether it be the custodial referral programs or even going back to the first integration that you asked about in 2018. We did one.
Mm-hmm.
And then thinking back to that first integration versus our goal for 2026, we have a factor of 20x in terms of the goal that we have for mergers in 2026 versus 2018. I anticipate digital marketing will be on the same journey. But we are very focused on looking at what areas of growth within the firm that we can develop into $1 billion AUM plus goals per year.
Mm-hmm.
And we believe digital is on that path.
3 years to mature a growth channel, a 20x increase in M&A goals from 2018 to 2026. Digital marketing positioned to become their next $1 billion channel. That kind of patient, strategic growth requires something most firms struggle with: leadership teams that genuinely trust each other's expertise. And throughout this conversation, I kept noticing how Matt deferred to Danelle on client experience, to Michelle on marketing strategy, to both of them on culture and partnerships. That's not performative. That's how they actually operate, which made me curious about something. Mission Wealth has 47% female partners. 58% of executive leadership are women. In an industry where women typically represent 15 to 20% of advisors, those numbers stand above. So I asked Danelle, is this just good culture or is it actually a business advantage?
That is a unique aspect, and I think benefit of Mission Wealth is the female representation. As a person who's been a female advisor for the majority of my career, I've always felt like being a woman in this industry is a strength. And I've encouraged other women to get into the business just because it historically has been male dominated. Um, I think that women can stand out more. I think a lot of clients prefer working with women and not just female clients. I've even had male clients say they prefer working with a female advisor. And I think for those same reasons, women make great leaders. And I've had people ask me before if I've ever felt like being a woman has held me back at Mission Wealth or prevented me from my career aspirations. And frankly, no, I've never felt anything less than completely supported at Mission Wealth. And that's a testament to our co-founders, Seth and Brad, and to Matt as CEO, and to our other leaders. It's truly always been about raising up the very best people for the roles that the organization needs, and very little to do with anything else. And so we happen to have a strong leadership team that is over 50% women. We have a partner group that is, I think, almost 50% women. A lot of our advisors are female. And we're a place where everybody is welcome and all ideas are welcome. And we know that we serve a diverse group of clients. And so we need all types of people here working on behalf of the organization to take care of those clients.
We've heard how Mission Wealth maintains boutique service at scale, 60 households per advisor, wealth strategy group specialists, Herbers and Company diamond team structure. But as they grow toward that $32 billion goal, they need to answer a critical question. How do we maintain this level of service while doubling the firm? One of their answers is AI, but not in the way most firms are approaching it. They're using it to multiply advisor capacity without adding hours to the day.
I think this is a consistent pattern in that we love to test things at Mission Wealth. And so one of the initial tests around artificial intelligence was with Jump AI and figuring out how we could help, our advisors just be that much more productive in their day. And so we ran a test. We have a wonderful technology team, a data scientist in-house, and we measured over the course of a year what the benefits were of using a productivity enablement like Jump AI versus just the traditional way of, having served clients as usual. And we were fascinated to see the improvement was about 50% more productivity for advisors in just getting through their weeks and getting through their meetings and their services. Which obviously feels good, but really the life work balance improvement that we saw from those advisors that were AI enabled was just a lot less backlog, far fewer meetings that were, in the queue, ready to be booked. And so the advisors that are using AI just feel better caught up and not as behind. And that's just a wonderful feeling if you're an advisor, especially during a busy time of year, like end of year, tax planning season.
Michelle, what are you seeing as an opportunity? And I listened to one of the podcasts that you did. What are you seeing as an opportunity for AI and marketing for Mission Wealth?
I see AI as a huge opportunity for marketers to embrace. There are so many tools out there today. We recently took a tally at our firm of all the tools that our firm is using for AI. And we found that on our marketing team, we have been using nearly 15 or so different AI tools to help us be more productive and create better content. Everything from helping us improve our grammar and our writing to finding relevant content and timely topics that we can use in our content strategy. What we're trying to embrace now is using reverse psychology to think about where people are searching for us and to optimize our website and our firm, just in general, like our processes, so that we show up where people are looking for us. So I think the biggest opportunity with AI is just to save us time, to be more personalized and to be more productive.
Danelle, what are you seeing in your seat at president at Mission Wealth as an opportunity with artificial intelligence?
we see it not just as a tech initiative, but as a firm-wide initiative. And so we're trying to engage our entire team in how we can utilize AI to enhance the client experience and enhance the advisor experience. So one of our core values is growth mindedness. And so we're really encouraging everyone to be a part. Our tech team will ask for volunteers to test out different software programs. And we're just encouraging everyone across the firm to participate in those so that we can get input from advisors across the country serving all types of clients. And so it really is a firm-wide initiative that the firm is very supportive of. Of course, first things first is always client confidential and private security and information. So we're building out an AI policy right now. Our client protection of sensitive data is paramount to everything else. But we're putting together a policy to make it really clear to all team members what the acceptable uses are, what perhaps unacceptable uses are. And then we're looking into building a custom GPT that we can use for the firm as a resource for all the information that anyone might need to know on Mission Wealth as they're taking care of our clients. And then we're also building a data lake so that we can have a better 360-degree view of our clients, utilizing AI to bring together data from the various software programs that we use to manage our clients. So lots of exciting things on the horizon, and I think we're just getting started.
If you look ahead to the next, 3 to 5 years for Mission Wealth, like what would be the definition of success for you based on like where the business is today and what you believe the opportunity and potential to be? Like where are you excited about what the opportunity that Mission Wealth has in front of you? How would you define success over that period of time?
Oh, that's a good question. I think success for me, first and foremost, is maintaining our culture as we grow. That would be a success to me because I think our culture is so special, and that would be great. And I know all of our teams are going to grow. I mean, I think we're forecasting maybe 20 or so in the marketing team specifically.
Wow.
And success would be to see people in their seats today growing into leaders. We want to see more leaders at our firm in general. And so seeing more people thrive in their positions and maintaining our culture while achieving our goals, I think would be the optimal definition of success for me.
And I would add to that, just to be able to serve more people. Like I said earlier, I always have felt so convicted that clients are better served when they come to Mission Wealth. And I believe the same is true for advisors. And so I would love it for Mission Wealth to continue to have the opportunity to take care of more clients and to be able to do more things for those clients, to be more of that one-stop shop for our clients. And I might be stealing a little bit of Matt's thunder on this, but I'm also really passionate, as is he, about creating opportunities for people. And Michelle mentioned this, but raising up other leaders, bringing in new team members, promoting interns to associates to advisors, promoting people into our partner group. And so success to me is that we continue to create opportunities for others so that we can continually bring more value to our clients.
What thunder is left? I don't know. I think Danelle and Michelle have taken it all, but I think I was going to go down that path of the one-stop shop as well, and maybe that's been overutilized, but keeping an eye on the end client, making sure that they are receiving more and more service each and every day, using technology to reach them in new and unique creative ways, I think is kind of the next 3 to 5 years. And then also just making sure that we always put energy and optimism into our team, our existing team, our new team members, and finding ways to make sure that they give them, they get the energy that they need so that they can then pass that on to their team or their end clients. And so whether that's defined as culture or training new leaders, just kind of constantly energizing that next new person that joins Mission Wealth is the focus.
You're a $13 billion firm today. Where do you see that number in 5 years' time?
Well, I can answer that specifically because I know. that it's going to be $32 billion in 5 years. But what I have observed over the years is that when we do build longer term forecasts, we always exceed them. But I just would be careful to state that the goals of Mission Wealth go much further than 5 years. And we talk about being a firm of permanence and how do we provide a place to take care of our team and to take care of our clients indefinitely. And so that is a difference with Mission Wealth here, is that, we are thinking for the very long term.
Here's what is staying with me from this conversation. Mission Wealth built a model most firms say is impossible. 60 households per advisor, 16 to 18% organic growth year after year, net of market and acquisitions, 62 equity partners with a single share class. They're not choosing between quality and scale. They've architected a business where both are possible. The Wealth Strategy Group isn't overhead. It's how they serve 5 million AUM clients profitably. The Herbers & Company Diamond Team structure isn't about collaboration theater. It's how they grow with intentional capacity limits. The 3-year patience for new channels isn't slow. It's how you build billion-dollar growth engines that compound. And John Warrens was right. Fewer than 20 firms are doing digital marketing profitably. Mission Wealth is building to be one of them, not because they found a shortcut, but because they're doing the foundational work most firms skip. If you're wondering whether you can scale without compromise, whether you can distribute ownership without chaos, whether you can build something permanent in an industry obsessed with exits, this conversation has answers. Thanks for listening to Growth Leaders of Wealth Management. If this episode resonated, please share it with another firm leader asking these same questions. If you loved this episode or had an aha moment, I'd love to hear what resonated with you from today's conversation. I hope you'll find me on LinkedIn and share your takeaways. Or please leave us a review, because ratings and reviews are always appreciated. At FICOM Partners, we're on a mission to help advisory firms achieve the growth you're capable of. We serve as your outsourced chief marketing officer and marketing department, driving marketing-enabled growth through strategy, execution, and advisor activation. For more valuable resources, please visit ficompartners.com/insights. I invite you to subscribe to the podcast or subscribe on YouTube so you can continue learning from more inspiring growth journeys. I'd like to thank today's guests, our producers at Podpony, my production assistant, Molly Spina, my most amazing executive assistant, Kristen George. This is Meg Carpenter, CEO and co-founder at FICOM Partners and your host of the Growth Leaders of Wealth Management podcast.